Hi guys, and welcome to FX Market Strategy. I hope everyone having a great day. So today we are gonna study the MRC Trading Strategy with RSI. Okay, so first you go here and just click MRC. Then you're gonna get this one right here. Okay, so just click on it. Okay, this is gonna show up just like this. I have the standard. So basically what this is just 100 moving average at the middle right here. If you want to make sure, we're gonna go indicator, and we're gonna use EMA, exponential moving average, plot it right here, and just come here to the setting and just use the 100 setting, and you're gonna see it almost matching with the middle line. Very close to it. They use the simple moving average, not the exponential. That's why there is a little bit of deviation here. If you apply the simple, it's going to be almost typical. Okay. So this is the middle line is 100 simple moving average. Okay. Then you have a kind of standard deviation away from it. Okay. According to the volatility and everything. There is multiple methods you can choose this upper and lower channel. If you double click right here, first of all, the inputs, you have the price source. So it comes as a default HLC, high, low, close, divided in 3 for those who are kind of new a little bit. Basically what this is, if you have the candle like this, and everybody of course know this is the high price and that's the close, this is the low price and that's the open and that's the close, if it's a bearish candle. So basically you can use the close. Most of the indicator use the close price, some use the open, some use high, some use the low. Okay, other indicator, they will take the high plus the low, okay, and divide it in 2, and this is going to give you exactly the middle of the candle. Okay, other ones, what they're going to do, they're going to give a little bit of extra weight to the close, so they're going to use high plus low plus close and divide it of course in 3. Okay, and that's what we have right here, HLC divided in 3. Some other ones, they actually add the open also to this one, and of course they divide it on 4, and this is going to give you the average for the high, open, low, close price. Okay, so in our case we are using the HLC divided in 3. Okay, so just to give you an idea. So then to study this more a little bit, right here, just click on it. So basically what comes as a default is the super smoother, which I tried them and it seems to be the best one. Okay, you can try to use different kind of settings right here. You have the simple moving average, exponential, RMA, but I found this to be the best right here. Okay, so you guys, you can play with it. Also the look for 200 period, you can increase or decrease, but usually 200 is good. Why? Because this is almost the annual. The year is 365 days, right? If you take all the Saturdays and Sundays off, okay, then you dropped almost 10 days per month, so divided by 12, almost 120 days gone. So if you take 120 days from this one, then like you have 5, and that's 4, and that's 245. Then from those 245, you take all the other vacations and holiday, and all the Black Friday, the Christmas holiday, and everything, it's gonna work out to be very close to 200 actually working days. Okay, so when you use the 200 moving average, it's almost the annual average. So basically, when you look back at the period for 200, it's almost giving you the full year, and that's the trick, guys. Okay, so when you hear about they're using the 200, this is 1 year. 100, this is 6 months, which is half a year. So this is the half a year. Okay, of course you got this 150 is almost the quarter. Okay, so basically when you get the 50 to cross the 200, and that's called the golden cross or the dead cross in the stock market, because the quarter is crossing the annual. So basically the company performance in this last 3 months is actually doing better or worse than previous, okay, or compared to the average. So that's the point about the 50 and 100 and 200, and always try to use percentage 1 to 3 in the moving average across and stuff like that. So it's usually good. Okay, anyway, so you get the idea. So basically, this is the 100 moving average, okay? And this up and down, they study 200 periods, okay, 200 candles, and they get the readings for the deviation from this according to the MRC support resistance study and stuff. Then they give you this upper and lower area. And basically what this is this is like extreme. If the average right here, that's where the price should be. Of course, the price is not going to stick to the 100 all the time. Okay, so the price is going to have swings up and swings down. So when the price comes to reach this red at the top, basically that's very extreme. And at the yellow, that's just getting to be extreme. And when it goes all the way to the red, that's kind of very extreme. Okay, so basically that's overbought. The price did move further away from the 100 moving average at the middle by a lot. So basically there is a big chance the price will start cooling off, coming back for correction, or is just gonna reverse. Okay, so that's the idea. So it's very good to give you boundaries. So if you're right here, you basically have this area as top right here, and actually the price did come very close to it, and also gives you two other levels right here. So it will take this extreme and will divide it and give you this middle and this middle. Okay, so if you take this like a 0, and that's like 100% plus, so that's like, let's say 50 plus, and that's minus 100, so that's minus 50. So it divides it also. That's really cool. Okay, guys. So basically what you want to do, also we have the RSI. Basically the RSI gives you relative strength index. To plot this one is really easy. You can just type RSI right here. It's gonna come as a default relative strength index. Everybody knows about it, so it's not really difficult. The only thing we're gonna do, we're gonna change the setting a little bit to use 15, 16. Okay, it comes with default as 14. Usually 15, 16 is better a little bit. Okay, so it doesn't have too much noise in it. Okay. Also, 1 hour time frame is usually good in trading. So basically, when the price comes here in the RSI, it needs to go up and come down. Just going up is enough. It needs to go up and come down. It gives you indication that the price is overbought and possibly will reverse. And that's what happened. If you pay attention to area, it did. See what happened here? The price goes up again. But that's really interesting. Why interesting? Because as the price goes up here, what happened down here in the RSI? Actually, it's gone down. Okay, the price is going down. So you also have a divergence in the RSI. The price saying I'm going up, but the indicator saying I'm going down. And what actually happened after it did drop down all the way below to the 100, it almost reached this minus 50 and started bouncing back. Okay, but look at the RSI. What it did do? It did touch the minus 30 right here. Okay, the 30 level. The 30 level is oversold. So when it comes down to 30 here is oversold. When it goes up to 70 is overbought. So basically when it touches it make also, if you pay attention here, there was a small divergence. See what happened here? As the price goes down by a little bit here, it's almost horizontal here. This small thing right here, like it looks like if you zoom it a little bit, it's gonna look like a double bottom right here. Okay, so it did have a double bottom right here. It started bouncing back up and going up. So that was also indication from the RSI you can get a buy from here. Okay, of course, if you buy from here, or if even you wait, it breaks above the 100 moving average, your stop loss is below here, and your target always play with this one level and here and there. If you can buy close to this one in the way up and you can close here is good. Okay, so that's a way to look at this one. Okay, so basically as you can see, the RSI is giving you a really nice help right here, but you cannot rely on it all the time by itself. Right here was really nice. It did go up here. Okay, just keep moving down here. You can have, see this what happened here. It's almost like a lower high here also. So it did bounce back a little bit. Start having going back up here. Okay, as you can see, if it dips below the 100, you need to focus. You are an uptrend or downtrend, basically. Have a bigger picture study, 4-hour time frame daily. And if you're on an uptrend, then you want to take every buy and avoid every sell. Basically, just do not try to catch every buy and every sell. You're gonna get confused big time. You need to focus on one direction. Either one has the more potential, and focus on it. Okay, I'm gonna go in the pound dollar. I'm gonna only take the buy positions because in the longer term I'm gonna buy. For example, okay, guys. See right here what happened also. You get this one, you break above here. So if you break above here, you take a buy from here or stop loss below here, and your target here is also good. Okay, if you decide, you see it go up deep here, start having two nice candles. I love this, especially in the bound, guys. When you see in the bound one up candle and very strong, and start to see two candles like this, that's actually beautiful. It's really nice. So right here, this is also possibly a sell all the way down here. Okay. Something like See in the BTC right here also, and the RSI is giving you a nice indication. See what happened here? It did dip a little bit. It dipped here. Once it did break here, see break above the 30 level, don't buy it unless it comes back. It bounced above the 30 level. It did bounce above the 30 level with a strong candle here. See this here? All this was going down, 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 down. Right here, it started bouncing back up. Okay, and that break right here. That was good buy. That was good buy. It did go all the way to touch this area, which we say supported the minus 50. Okay, so the first time it went to the zero reference, the second time it did go to the same level, then bounce back, find support here, found support here. This is very respectful, guys. Very respectful. See what happened here?